Gevo's got a new surprise for us investors. Is it positive? Is it negative? Let's find out in this video. And we don't beat around the bush on this channel. The surprise is that they want to amend the basically dilution that it was already planned. So from 250,000 shares that they wanted to sell before, now they want to double it, basically 500,000. Now the first thing to take away is that this is not gonna happen willy-nilly. They will have to, first of all, vote, and if you are an investor in Gevo like myself, you should go and vote on their website. It's everything in the filing, and I'm gonna put it in the description below. But first, let's understand why it's a very important matter for us investors and why they're doing it. It's obviously very important, right? But before we explain that, let's remember that if you want to stay up to date on Gevo, this is the channel. I make video updates like this one on a regular basis. But let's move on the reason why they're diluting their stock. Whether it is Gevo or any other company, the reason for diluting their own stock is one and one only: to raise cash. And that is doing it in probably in the best way possible, because it doesn't lead to any debt for the company. They just dilute the stock and they raise cash. The other alternative would be to issue bonds, which they've already done for other investments. And I think the reason why they're doing it is, well, let me show you. And this is the reason why I think they're raising cash. They are already planning to build this RNG plant to basically produce a renewable natural gas. That's what RNG stands for. Now, they've already issued that with the idea of obviously financing this project. But as you know, we are basically about to face very hard times for speculative plays and companies that are not profitable yet. Basically, Gevo is one of those. And this plant that they're planning to build for Gevo, I really believe is gonna be a game changer for the stock and also for the company, because obviously natural gas. And if you've been subscribed, you would know what is happening with natural gas. Now, natural gas is a commodity. These are the futures for the commodity, basically the price. And as you can see, it has gone up. It's now coming down in price. It is obviously still very high compared to 2020. And again, it's coming down for a couple of reasons. The first is that basically this winter is supposed to be quite mild compared to other winters. Especially 2020 was a very harsh winter and we all suffered. But in 2021, at the time of recording, it seems that this winter is gonna be not too cold, and so this is what's happening. The price is coming down. But overall, it's a very profitable business for Gevo. Okay, enough of thinking about the new project, but why would you invest in Gevo today and why you should not do it? Well, let's look at both scenarios, starting from the bullish scenarios, the one where you invest into Gevo. Now, there are literally two reasons and they're both summarized on this article. First of all is that there is a potential customer contract pipeline that has grown to over 1 billion gallons. That was the latest update. So it means that they have quite a lot of customers waiting for all the plants to be set up to be starting producing these renewable natural fuels, which is the main selling point for Gevo. Then the other reason is still down here, is basically that the US and the EU have set goals that together would support almost 4 billion gallons of annual SAF production in 2030 and more than 45 billion by 2050. And so the bottom line is that this company has got so much potential for their project, for their main selling point, which obviously are these projects which are being developed as we speak. And actually, that's another very important thing that you have to consider if you are a bull on Gevo. And this is the last thing we're gonna look at before we look at the bearish scenario, and that is very important, guys, so stick around. But as a bull on Gevo, as I am, I'm an investor in this stock. By the way, if you want to know what I'm buying and selling, first link in the description below for my Patreon. But then let's have a look at what is happening here. So the main selling point of Gevo is this Net Zero 1, a plant that should be completed, at least in terms of the front-end engineering, by the end of 2021. Now, in terms of production, that will probably happen in 2022, and that will create a precedent, a proof of concept that will then snowball into potentially more contracts to build new plants like this one, and then the future we shall see. The price must go up at that point. But now, so let's flip it on the other side. What do we have to look at if we are bears on Gevo? What we have to really pay attention to? Now, the first thing is that if you look at, obviously the stock market is not the same as looking at Gevo as a company. So there is obviously an influence of the fundamentals on the stock price, as you can see on the chart. But overall, it's very much being led by other things like sentiment and the overall sentiment of the market. And so, as you can see, the price went all the way to all-time high back in February this year. And then it just went down. But why did it happen? Well, let me show you this incredible chart. Now, I want to start from, again, the price of Gevo. And as you can see, just keep this in mind, February this year was the peak. And then let's look at this other bad boy. And this is the money flow going into ETFs and the cash flow. So as you can see, in February this year, the amount of cash going in was incredibly high. And then we saw another two spikes, as you can see here. And guess what those spikes are? So the first one is February up here. Then we had another spike in June. And then we saw another tiny spike here down in February. But overall, the price is going down. And the same is happening. Look at this. Look at this. Let me zoom into it. Basically, the price is coming down, and the same is happening for the liquidity of ETFs, basically the stock market. And where is this money going then? Well, the truth is, come closer, nowhere. Actually, it is true. The money is actually money that is coming from the bond market, and that is something that I've been telling you guys. The stock market is actually a reflection of the policy that the Fed and all other central banks are adopting for the bonds, so the debt market, and that is very important, and let me show you. And we're now looking at the total bond mutual funds. So as you can see, and this is again the liquidity, it is now going down so much, meaning that all the money that has been pumped in, and you see 2020 what happened. Basically, we had the massive drop, and this is down here when the Fed came out and said, guys, we're gonna just print money like there is no absolute tomorrow. Well, you see that the money going in just went up like a rocket ship, and now it's coming down. And so overall, the easy money period seems to be over. And again, obviously that is not for all stocks. And when we're talking about Gevo, is a stock that is very much speculative. And so the bottom line here is very simple. If you are a long-term holder and you want to make sure to get into Gevo before it becomes a massive company and before it basically becomes too big and too expensive to buy, probably it's a good time to buy now. However, remember that the stock might come down in price even more. I know that it's kind of unbelievable to even think now, because it has come down so much from all-time high, but the stock market, as you can see, it's basically moving from stocks that are very speculative like Gevo into big tech stocks mostly, and in fact even away from stocks into the debt market. Join my Patreon if you want me to help you even more, and I'll see you in my next Gevo video.